Hey, everybody. Michael Workman here with the first resin market moves of 2026, powered by ResinSmart. And Happy New Year. I realized that Larry David has kind of weighed in that January 7th is the cutoff. So it looks like I still made it. And it didn't take long for 2026 to deliver its first Black Swan event, with the U.S. moving to effectively control Venezuela and their oil production over the weekend. It's a headline that's getting a lot of attention right now, understandably so. Venezuela does have massive oil reserves, but for resin buyers, the key question isn't is this big or was it legal, but it's does this actually change resin pricing forecast in North America in 2026? So the short answer is not directly and not immediately, but it does introduce a new variable that buyers should understand, especially as it relates to energy costs, refinery behavior, and volatility. So this isn't a story about Venezuelan polyethylene or polypropylene flooding the U.S. market. That's not going to happen, and it's certainly not happening today. Instead, the impact is going to flow indirectly through heavy crude availability for Gulf Coast refineries. It's going to affect diesel and freight economics at some point, refinery utilization, and petrochemical feedstock chains that are tied to refining rather than natural gas and ethane cracking. So the right way to think about this is on the second order effects of this, not knee-jerk reactions. If Venezuelan heavy crude returns to the Gulf in a significant way, it could create lower refinery feedstock costs, ease tightness in the diesel market, and soften some of the embedded energy and freight costs that have showed up in delivered resin pricing. There's still a lot of folks that quote delivered pricing out there. That's mildly bearish to neutral for resin pricing this year, not bullish. But, here's the catch of the whole deal. Venezuela's infrastructure is in pretty bad shape. Bringing significant barrels back online is going to take years, not months. And for 2026, it's more about expectations and headlines than actual effects on the physical supply of those feedstocks. The bigger impact in 2026 is going to be continued volatility. We're already seeing policy whiplash, increased risk of sanctions. We'll see refinery adjustments, and OPEC plus responses are all going to mean that the markets are going to react quicker to news, even if fundamentals haven't changed meaningfully. And that's going to create opportunities for buyers that remain disciplined. And it is going to create some risk for folks that are reactive and not paying attention to all the details. So, as we always do, we want to focus on the resin buyer. What should resin buyers do with all of this? Don't wait and overcorrect to headlines talking about crude oil. Let's keep our eyes on diesel pricing, refinery utilization, and propylene and aromatic availability instead. If we can get any index agreements that are linked to natural gas in a meaningful way, that's the mechanism we want to look for. But most importantly, just don't let uncertainty become an excuse for non-market margin creep in your supply chains. Keep up to date with us, and we'll help you weather the storm here. This event isn't going to rewrite the outlooks for 2026 that we've been communicating to customers for weeks now on different resins, but it is going to reinforce and continue to reinforce why being prepared and having the right benchmarking and monitoring clear market signals is going to be even more important this year. So with that, we're going to keep watching closely and reporting back out. Everybody, welcome to 2026. It looks like it's going to be a wild ride. All right. Have a great week. Safe travels. We'll talk to you soon. Take care.